Our next speaker is Bob Welsh, who Bob has more than 20 years experience in managing superannuation. He's now the Executive Director of Sustainability Advisors, which is a boutique advisory firm established in 2011 that helps organisations enhance their long-term performance through integrating sustainability into core strategy. And Bob's had quite a bit of experience working within the super sector, trying to achieve change in that respect. Because Bob was formerly the founding Chief Executive of Vic Super. In 2005, Bob was appointed the founding chairperson of the Investor Group on Climate Change in Australia and New Zealand. And Bob is also the President of the Environment Protection Board of Victoria. So having heard from Mara about this scale of challenge and what we need to grasp and to actually do to actually achieve change, now we're going to hear some insight from someone who's worked really within the sector for quite some time about how the sector works and what we can really do to push the right buttons. Thank you, Bob.
Well, thanks, Julian, and good evening, ladies and gentlemen. It really is a pleasure to be here. I thought after I finished my role as CEO of a super fund that I wouldn't be speaking about this issue for some time, so it's really a privilege to share some thoughts on the possibility of super being fossil-free. This is, as you've heard from Mara, a pretty complex problem because we have a climate which is now probably unsafe and will be even more unsafe in the years to come if we continue our current policies. The other day I went to the football with my son and my grandson, my 6-year-old, and for some reason I had the presence of mind of asking my grandson what he thought about climate change and what should we do about it. And we were going to the football and his little brain was thinking about, we're going to Etihad Stadium and there's a roof there. And he said, well, Grandpa, he said, I think we should cover all of the football grounds because when it rains, my chips won't get soggy. And I thought to myself, brought me back to earth and thinking that, the way that the young person would think about this complex problem. Congratulations too to Market Forces and 350.org on this really exciting initiative to set up a website where people can go to see what their super fund is investing in terms of fossil fuels. My one message this evening is that super fund trustees need your help. Super fund trustees needs the help of their members. We've heard from Mara about the climate rapidly changing. We've heard that 2 degrees plus as a cap that was set back in 2009 is now really quite unrealistic. We think it will be exceeded under current policy projections and it will definitely deliver an unsafe climate. So if we continue our current course, we've got some problems. In fact, in my experience, most super fund trustees in Australia would agree with the science. All the trustees that I've spoken with over a decade or so would agree with the science, but they struggle to make meaningful change to really combat this incredible risk. And they're not alone. The whole investment industry, both here in Australia and overseas, really struggles to make meaningful change. And you're probably aware that some super funds will adopt or establish a single investment option, which might be called a sustainable investment option. That really is not making a meaningful change. To me, it's like a manufacturer of automobiles with 40 different models, which are petrol and diesel drivetrains, and have one electric vehicle. The only way that super funds can make a difference is they have to have an approach to reducing their dependency on carbon emissions for investment returns right across their mainstream portfolios. And you're aware that most super funds have what's called a default option, and that is the option that people will go into when they join a fund if they don't make a selection. So really, super funds, to be meaningful about this issue, really need to make the changes to their whole mainstream portfolio. But they struggle to do this. Why do they struggle? I came up with a couple of reasons in my experience. The first one is that some trustees will say, we can't do anything because nobody else is. You have that herd mentality that we can't make a difference because there's a peer risk if we try to make a difference. Second one is that trustees often say that the risk of impairment, the risk of loss to value in the investment assets of a super fund due to climate risk are so far off that we don't need to worry about it now. And related to that, a lot of trustees and investment managers will say that when things do go pear-shaped, we will be able to get out by selling our assets. The trouble is that everybody will be trying to sell their assets at the same time, and you finish up with a massive loss in value. Fourth reason is that when you think about it, super fund trustees, investment managers are not incentivised to think about the long term. They're incentivised to think about the short term. So what that really means is that it's difficult for trustees to reimagine or to imagine their world differently to the way it currently is. And the last one I thought of was that a lot of super fund trustees naturally are concerned about making dramatic changes to portfolios which might see them sacrificing returns. And again, that's quite reasonable attitude to take, and certainly over the short term, it is possible to have lower returns when you make significant changes to portfolios. But I think over the long term, we're talking here 15 years plus, then there really is not an impact on returns by moving towards more lower carbon intensity in portfolios. And as you know, super fund trustees are required to act in members' best interests. You know, it's a fiduciary duty of the trustee. And it seems to me that if you think about what best interest means for a person investing for their retirement income, I think the average age of members of super funds in Australia might well be around about 40, 41. So they've got another 20 years or so of accumulation to go, maybe another 30 years of retirement to go. So I can't see how cooking the planet is in anybody's best interest. So what can trustees do? Well, the first thing they can do is that they can do an assessment of their total investment portfolio in terms of the carbon intensity of that portfolio, and then start to make plans about what you could do to reduce that carbon intensity. Having done that, next thing you could do is to think about engaging with the fund managers that the funds use about their attitude to lowering the carbon intensity of the investment portfolio. And if you're involved directly in investing, then start to engage with companies about what they can do about lowering their intensity in terms of carbon exposure. You could then, as a super fund, you might decide that there's many ways in which you can have what I would call a carbon light portfolio without sacrificing returns. I mean, we trialled that back in about 2005, 2006, where we said if we could understand what this is at Vic Super, if we could understand what the total carbon emissions is of the top 1,500 stocks in the world, is it possible to have a portfolio which would get the same return from investing in the overall index of international companies and have a 50% lower carbon exposure? And we proved to ourselves that we could do that. And that's just sort of one simple way in which you can actually have a lower carbon emissions from a portfolio without sacrificing returns. The other thing that super funds could do, and they often don't, is actually get involved in climate solutions. How do you direct investments directly into solutions? How do you actually seek out renewables? How do you seek out investing in a way that you can provide some of the solutions to the climate problem? The last one, which most funds don't do, is you can choose to be an advocate for change. Now that means you have to be an advocate, as people in this room would know, year after year after year. We really do need a price on carbon. And it seems to me that those people who are looking after the investments of the vast majority of working Australians should be thinking about advocacy with the policymakers. But just to conclude, I think the good news is that this is complex, but it definitely is possible to finish up with investment portfolios which may not be totally fossil fuel, but substantially less fossil free. But it's substantially less carbon intensive than the current portfolios are. But the only way that super funds are really going to react to all this is that they need to hear the voice of the members. So there's no doubt in my mind that using a product like the Super Switch, which I think is a great initiative to get people to understand how much their funds are exposed to carbon intensity, if you can get to the super trustees, raise your voice, be vocal, be loud, and say what you require in your best interests. Thanks for the opportunity of sharing those thoughts.
Thank you very much, Bob. Great insights from within the sector, and a great reminder that it's your money, that it's your retirement savings. You have a right to direct and steer how that money is used and how your super fund behaves, and you have a choice of funds that are actually out there.